Finally today, this is an interesting story out of the South China Morning Post. China has apparently drafted new antitrust guidelines to rein in its tech giants. So maybe this whole story of China cracking down on Ant Group's IPO is indicative of something larger going on over there. Stocks of some major Chinese tech companies are down majorly on the news, by more than 10% in some cases. I'm talking JD.com, Alibaba. I so don't know the background on any of this, so I'd love to hear more from someone who understands the Chinese scene better. And also, wouldn't it be ironic if tech platforms were under siege from regulators in North America, Europe, and now China too? Maybe everybody thinks that tech has just gotten too big. What did I once say about how governments are very sensitive to and very jealous about threats to their power? They can feel when a rival grows in their midst. Quoting the SCMP, China has released a draft antitrust guideline to rein in internet-based monopolies, signaling policymakers' heightened concerns over the growing power, influence, and risks of digital platforms and their market practices in the economy. The move immediately erased about $1.2 billion worth of market value from Alibaba, Tencent, and Meituan. Monopolistic practices by internet platforms, such as demanding vendors to transact only on one platform exclusively or providing differentiated prices to customers based on their shopping history and profiles, could potentially be outlawed, according to the guideline released by the State Administration for Market Regulation on Tuesday. This is the first time the market regulator has attempted to define what constitutes anti-competition practices among internet companies under the law. An overhaul to the anti-monopoly law in January went only so far as tweaking the language to encompass internet companies to begin with. It will seek public opinion on the draft until the end of November. Quote, the policy is clearly targeting the tech giants, with e-commerce, online food delivery, and ride-hailing platforms likely to receive the biggest blow because of how concentrated these sectors are, said Alan Lee, a portfolio manager at Atta Capital in Hong Kong. This is probably just the first shot, he said. The guideline also deems activities like platforms offering steep discounts to eliminate rivalry, colluding on sharing sensitive consumer data, and forming alliances to force out competitors as potentially monopolistic. The latest move has put China watchers on alert as Beijing appears to be starting to clip the wings of some of the biggest companies that helped revolutionize consumer spending behavior in the world's second largest economy. Just last week, it surprisingly halted Ant Group's record-breaking stock offering by throwing new microlending rules at the Jack Ma-controlled fintech company, end quote.